Welcome to Day Trading 101 for Beginners. This is episode 2. We're going to be breaking down how to determine a good stock to trade. But that being said, be sure you're starting at the beginning. I go over terms, terminology, all these things that we want to lay that foundation. So don't jump around. Go to the beginning. Make sure you're getting all the materials. And then number 2, be sure to go to StocksToTrade.com/free training, because specifically today we're going to be working with a worksheet, and if you haven't gone there and dropped your email in, you don't have the worksheet. So 2 things: check out episode 1, get your worksheets. Okay, that being said, you're ready. So today we're going to be talking about technical and fundamental indicators and what the difference is and how to determine what's a good stock. So with the long trade selection worksheet, I'm going to go over the 10 criteria that really do that, both from a technical standpoint. So when I say technical, we're not talking like, programming or semiconductors or something like that. We're talking about chart indicators. So when we say technical analysis, that's what I mean when technicals. Then when we're talking fundamental analysis, we're talking about the sales of the company, the sector, their profit and loss, the balance sheet at the end of the day. So technical is strictly the chart. Fundamental is breaking down the business, the fundamentals of the business, as they say. Then what we do to spot a good day trade is we combine those two together and maximize our opportunity by checking as many boxes as possible. So I'm going to break down the sheet, what the criteria are and why they matter. And also, you got to know what they are and how to look for them in order to fill out the sheet. So starting right off the bat, we start out with, is the stock a low float stock? So again, if you were on episode 1, you know exactly why we care. It's based on supply and demand. Okay, fewer shares available, higher potential for explosive moves. So when we talk about low float, typically, not always, but the general rule of thumb is a stock with less than 10 million freely tradable shares. And so I want you starting right there. If you're looking to day trade a stock, I want you checking yes to that box. If not, you probably throw the sheet away and start over with another stock that is less than 10 million shares. Next criteria is the stock up more than 10%? Now, a lot of you that are new to day trading might be like, well, Tim, if the stock's already up 10%, why would I even be looking to trade it? Well, you're obviously new to low float stocks and obviously new to the wild markets we're in, because in this day and age, I could probably change that criteria to up more than 50 or 100%, because once these stocks move and once the volume is there, the small moves beget big moves. So 10% bare minimum. And I tell you, as I mentioned, especially right now, you could probably make that 20, 30, 40, 50% to narrow down your list of stocks. Because remember, one of the biggest things we're trying to do with these sheets is get you the minimum number of watches. I mean, listen, you can run a scan and have 1,000 stocks, but you can't research them all, much less trade them all. So we're trying to winnow down to the best opportunity of the day. Next is there unusual volume? Now, I'll define that for you. Unusual volume for me, and what we look for, is significantly higher than the 60-day average volume. Now, if you've got StocksToTrade, it's one of the number 1 criteria I look at on every single stock, but you can do this with other charting packages. Look for that 60-day average volume, daily volume, and then you're looking for 10 times, 100 times, multiple 100 times the average volume. What's that tell you? Back to supply and demand. I mean, one of the biggest things about this course, you're going to hear me say it a million times, we're looking to trade stocks with small supply and huge demand. Think concert tickets, okay? If there's 20,000 seats in the arena and everyone wants a ticket, you're not paying face value, okay? Face value might be $50, but if you're in the front row, you might be paying $500, $5,000. Who knows? Maybe $50,000 if it's like some great, hotly anticipated tour. That's what we're doing here. So unusual volume means everyone wants in. And the greater that multiple above the 60-day average, the better the opportunity. Next is the stock a former runner? One of my favorite sayings in the stock market is history doesn't repeat, but it rhymes, okay? And when we talk about former runners, you're looking at that 1 year, 1 day chart, looking across the year, and you want to see ideally one or even multiple times that this stock has put in huge moves in the past, because traders have memories and they remember the same tickers. And when you get a low float stock spiking up on news with unusual volume, they say, and I do it every day, oh, I remember ABCD stock from September or from May, and everyone piles back in. History doesn't repeat, but it rhymes. The same stocks. Listen, there's runners that have ran in 2021 that I remember running in 2009. As funny as that sounds, these stocks repeat, and repeat. Next is there a catalyst? Now, in day trading land, this can be very loosely defined. We just want something for people to get excited about. Typically, it's a press release. Maybe it's a new product. Maybe it's a new executive. Maybe it's a big sale, a big contract. We want a day one something, okay? Something for everyone to get excited about. So doesn't need to be a $1 billion contract. Maybe they're just coming out with some new product, or maybe they're pivoting into a hot sector. That's one of the biggest things we like to see. Next, is the stock breaking through a whole dollar, half dollar area? This goes back to that technical support and resistance areas, but stocks, and this may sound funny too, but I'm telling you, you'll see it over and over again. Watch a stock when it breaks $1, tends to spike fast. When it breaks $1.50, spikes fast. Breaks $2, spikes fast again. For whatever reason, and I'm no scientist, but the human mind fixates on those whole dollars and half dollars. I always give the example. There's a reason if you're looking at a used car, it's $19,999. There's a reason they don't just put $20K on the windshield, okay? $19,999 seems cheaper. $20K seems more expensive. It's that same mentality. When people see a stock skipping through whole dollar, half dollars, they get the FOMO, they want in, because now they think that 150 is way more expensive than 149. That's a big thing that you'll notice. Even if you're not trading these stocks, look what happens when they break those levels. Next, is there clear support to base your risk off of? That goes back to whole dollar, half dollars, 52-week highs, red to greens, a lot of these technical indicators we talk about. We want something that's significant to base our risk off of. So if you're buying that $1.50 break, that whole dollar, half dollar break, and then red on the day, if the stock goes below the previous day's close, is $1.25, that's a great stop to base your risk off of. Next, we jump over to the quality of the setup. This is where we kind of break down a few of the more nitty gritty. We talk about what is the float, what are we looking at, what is our risk area that we're basing off of, and then we're going to rate the catalyst. So that's kind of where we get into a little bit of, I don't want to say advanced, but a little bit of the fundamentals. So now this is where you're going to look at what does the contract actually say. Is there some good meat on the bone? What are the numbers? What are the length of the contract? How amazing is the product? What are the balance sheet of the company? This is where we kind of take some real quick cliff notes on how viable we think this company is. Now, we're just day trading, but what we're looking for is to build up that case. Now, we're not believers. We're trading momentum here, but we want to know what other day traders are looking at. And it's tough. It'll take you a few times to rate the catalyst, but the more you do it, the better you'll get at it. And you want to look for stuff that excites people, big numbers, long contract announcements, etc. So those are all the criteria we look at. Then at the bottom of the sheet is where we help you with execution, because one of the biggest things I see with new traders is they really struggle to follow their plan. And maybe I'm a little old school, but I tell you, writing down your stops, writing down your goals, writing down your entries will help you with execution, okay? It will help you with FOMO. It will help you with letting your losses get bigger than you anticipated. So the next thing we talk about is that ideal setup. We look for a good entry based off key technical indicators, red to greens, 52-week highs, whole dollar, half dollars. Then you're going to grade your setup. You're going to bring everything down, add together how many yeses you checked, how good is the catalyst, and then whether you grade it a 1 to 10, or I like to use letter grades for some reason. Lots of times I'll call it a C- or a B+ or an A+ setup. But however you grade it, write that grade down and then ask yourself, is this really checking all the boxes? Is this really a trade I want to make? And then down below, you put it down your entry, your goal based on 3-to-1 risk to reward that I talk about all the time, and then your stop, which is probably the most important thing to write down. And you probably won't do it. Most people don't. Most people don't write down these goals and stops, and because they like to violate stops. I mean, that's one of the biggest reasons we have such a high failure rate is people don't like putting it in ink, in stone, where you're going to stop out, because they like to justify losers and they like to take bigger losers than bigger winners. I'm telling you, write it down. And there's 1,000 books and research papers on achieving your goals, doing what you said you were going to do. I mean, even if it's just taking out the garbage today, you're much more likely to actually do it if you write it down. And I can't harp on that enough about how important it is to write down your stop and stick to it. So there you go. It's simple, but you got to make sure you're checking all the boxes. Does that mean guarantee the trade will work? No, but it greatly heightens your success. So that being said, be sure to head over to StocksToTrade.com/free training to get your weekly watch list, to get the trade journal that we'll talk about later, and most importantly, to get the worksheet we broke down today and we're actually going to execute on in the next class. So head over to StocksToTrade.com/free training and we'll see you on the next episode.